Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 26th of September here in 2023, which is our month end. We'll start October in a few days, but we have this week to get through. And we have a market getting through some support levels, with the S&P being down about 1%. Nasdaq was our big leader to the downside. That was down about 1.4%. Dow and the Russell, small cap, were down 1% in today's session. And just keeping this going, we had crude breaking out another 1% to the upside. So that is a little bullish move sustaining, and that's where we are watching. And so is the Federal Reserve with respect to inflation. And inflation in general is on a rise, and the most recent Fed day, which was last Wednesday, did tell us that although the Fed might not raise rates in November, they stand ready to keep rates higher longer than expected to combat inflation, and they probably will not cut rates to the extent that traders or forecasters were expecting in 2024. So what did that do? We're still seeing the impact or the after effect. Remember from last week's Tuesday evening video, that was before the Federal Reserve, I was saying the next move of the market probably is lower, strictly because the market is not quite pricing in what the Fed is likely to do, which is keep rates higher, maybe raise them one more time in 2023. So what was that scenario, and what are we seeing a week later? We are seeing downside activity in the equity market, but that's not where we'll start. Let's start over here with the 10-year Treasury note yield. And why would we start there? Because to me, that's simple. If inflation is and continues to be a little higher or elevated, and especially above what the Federal Reserve would like to see, then we're going to see the Fed raise or keep interest rates high. And if the Fed raises or keeps those interest rates high, that's your Fed funds rate, rates on the 10 and the 30 and the other Treasury yields probably sustain at these higher levels, or maybe even keep going higher. So that's what we're seeing here in the TNX. That's your 10-year Treasury note yield. That's above the target at 45, which I'd set a while ago, which is an upside target and trend continuation to the upside in yields. That's where we'll start. If rates go up, yields go up. We'll go to the next portion. If rates go up, yields go up, bonds go down. This is our 10-year Treasury note. That's TLT, or at least that 20 to 30-year bond ETF. Looking at IEF, that's your 7 to 10-year Treasury note, and that is to the downside as well. Looking at the futures contracts, ZN is at new lows as well. That's your 10-year Treasury note. That's, to me, the baseline and what we look at for those treasuries. But the bond, ZB, 30-year bonds, are also at lows. So you're not going to see much divergence or difference within the bond ETFs, bond products, and of course, the continued downtrend in the bond market. Now we can talk about stocks. And if that pressure on the down bond market and the pressure higher in yields, that sets up what we had talked about just recently with probably lower equity prices to compensate, or at least to take out of the system some of that liquidity. We've seen a few days in a row, except for one, of downside action. In fact, the day after the Federal Reserve, that's your Fed, that's the next day, and we're into here in Tuesday, has been, with the exception of one day, down, down, and further lower for equity prices. It has taken a hit in the Nasdaq, which has been on the forefront of the selling. Dow mini futures, again, what we're highlighting is that the broader market is not in an uptrend, but it's also not in a downtrend. The broader market, looking beyond the technology stocks, is a little more of a sideways trend. So looking at the Russell weekly charts from 2022 until present, we've had a sideways trend and prices at the lower bound of that sideways consolidation. That's about the 1775 index level. And in the Dow mini futures, not that much different. In fact, the Dow takes it even further back to see that it has been in a longer term, multi-year, sideways trading range, with the peak about 36,000 and now down to about 33,000 for the Dow futures. And again, crude is getting a boost and rallying, which is a sign of broader inflation. Bonds are falling. In today's session, where were the leadership stocks to the downside? It was a broad-based sell-off and a broad-based liquidation in the equity market. But were there signs of weakness? Sure. Amazon, Oracle, NextEra Energy, Southern Company, MetLife, and others. And again, while we focus on the technology shares, because that's a large part of the market, the weakest sector today is one of our most sensitive to higher interest rates. And it's not necessarily technology. It's utilities, XLU, utilities down 3% in today's trading session. And we have to go all the way over here to see where the utility sector is. And that entire utility sector would fit probably 3 times into Apple, probably 1 time into Google, maybe a couple times into Microsoft. But nonetheless, the selling pressure was broad-based, but the bulk of the selling took place in the XLU. And the XLU had already been weak on the year. So before today's selling, we've had the XLU, our utility sector, down about 12% in 2023. And that's at the same time the S&P is up about 15%. The Nasdaq was up about 30% or 25%. So utilities are weak, getting weaker, and the broader ETF is making new lows for 2023 after a 3% decline in today's session. On a 1-minute chart, that looks absolutely devastating. But that is an interest rate sensitive sector. So XLU and XLU related stocks, that would be NextEra Energy. We'll go to the daily chart to the right and the intraday on the left. NextEra Energy. We'll also look at Southern Company, which had its decline. In fact, Southern Company was off 3% in today's session. And some of the others, Exelon and the others, which are having a weak 2023. Speaking of weak 2023, I do like to spend a little time in my sessions bringing up weak stocks getting weaker. Now, what this is a scan for stocks that are making new 52-week lows. And I bring it up repeatedly because these stocks are on the downside and they are downtrending. And the logic here and why we bring these stocks to bear is a good way to say they are weak getting weaker and probably continue so. So stocks that are in 52-week low scans tend to continue or persist making additional future 52-week lows. There were 43 stocks in today's session in the S&P 500 that qualify as making a fresh, new 52-week low. Sorted by market cap, we'll start with Pfizer, NextEra Energy, UPS, AMT, Target, Estee Lauder, Hershey's, and down the list. Another way to get a characterization of not just the individual stocks to trade, but if there are sectors that are leading the pack, we see a lot of them in real estate. That makes sense. Higher rates are going to be a negative pressure on the housing market and corporate or real estate type investments. As rates go up, that puts pressure on those. And we see some of the real estate sector stocks are in that grouping of stocks making lows. In other words, you don't want to focus just on individual companies, but on the sectors themselves. Utilities have been weak all year, so we have 4 stocks making new lows, and of course, healthcare, financials, consumer staples, which is Conagra, Estee Lauder, Hershey's, and others. There's Target, Dollar General, Etsy, Cisco, and the like, and a few others in industrials and materials. So a quick look, let's go back to the market cap and go from the top down, just a quick view, looking at the daily chart on the left and the weekly on the right. First up is Pfizer, which made another 52-week lows, but Pfizer has been making 52-week lows throughout all of 2023. And that puts us on the bear or the short side of Pfizer, not at 52-week lows, but as a candidate to short sell when the stock retraces a little bit higher. Those give us real-time bear flag trades in a weak stock getting weaker. Next Era Energy, UPS. We'll see American Tower just going quickly through the stocks. Target, which has been on the very big decline since peaking in around 2021. So Target peaked in a 260, currently trades toward 100 per share. Estee Lauder, and then Hershey's, Crown Castle, which is a real estate, and then we'll have Realty Income, Cisco, and some others. But the main idea is stocks that are weak tend to get weaker. Stocks that have poor fundamentals or are rated poorly tend to keep underperforming the broader market. So we'll keep close watch on these, the market as it falls from its high, and of course the broader market and the broader economy, which continues to muddle through, neither being overly bearish, but absolutely not being overly bullish. Just to remind us, we are getting close to our deadlines in the trader's paradise. We'd love to have you join us in Florida. That'll take place on November 2nd to the 4th down at Delray Beach. We have the TheoTRADE live event taking place. You can see all the information here at TheoTRADE.com/23. And we have a new edition. If you see the schedule, we see the instructors, see all the lively faces in the team, and all the other special events you'll be able to take place live here with us in TheoTRADE. Step 1, buy your event pass if you've not done so already. And step 2, right here on the page. The cutoff date's coming. That's why we're reminding you. You don't want to miss this, and we don't want you to miss this. We want you to be with us there in Florida. But Tuesday, October 3rd, coming up to make reservations. So if you've not done so or have any questions, that's TheoTRADE.com/23 for our live event. Your event pass and your hotel room right there through the website. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for September 26th, 2023.